One of the things that's happened in the last week or so is President Biden signed into law the new Secure Act. If you want to see a full breakdown of the Secure Act, we've got a great article coming out on our website at the end of the week. So be checking our blog at the end of the week, and it's going to be absolutely everything you need to know about the Secure Act. But there's two things in the Secure Act that were signed that most of it had to do with retirement. But two things they did that were very cool that are helpful on this other issue. One is the law allows companies to make 401k matching contributions based on the employer's student loan payments, even if the workers don't contribute directly to their own 401k. So apparently, if I'm understanding this correctly, a lot of companies are helping with student loan debt one way or another out there. It's a hiring process. It's a hiring thing now. Signing bonus type thing. So like you got a match on your 401k. That's a reason to go to work for that company. We'll help you with your student loans. A reason to go to work for that company. So they're making this happen here. And if I'm understanding this correctly, the company can make contributions to your 401k equal to up to $3,000 a year, I believe it was, equal to your payments on your student loans. This is the same president that's forgiving the student loans. I'm so confused, but they're not forgiven, so there we go. And, this is the thing. So employers can match your student loan payments with retirement contributions. This is correct. Here, I'm trying to read the thing. Let's say you get a new job making $100,000, your employer matches 3% on contribution, but you're still working on getting Sally Mae out. Your employer could offer up to $3,000 of student loan. I was right about that. Yeah. So you put $3,000 down on your student loan. They'll put $3,000 in your retirement account. If your employer offered that, it is now legalized with the Secure Act. That's pretty cool.
Yeah.
There's a reason to do your debt reduction, reason to get there. And the other one that's even cooler, because a lot of people gripe about, well, if I put money in the 529, what if we don't use it? Well, number one, that almost never comes up because very few people put enough money in the 529 for this to be a problem. Okay, but let's say you've got $30,000 left over in your 529 and you didn't use it. Number one, if you didn't use it because of scholarships, you can take out every year the value of the scholarship. So if you get a $10,000 scholarship, you can pull $10,000 out of your 529, no taxes, no penalties. You just have to provide the documentation. That's already on the books. But the Secure Act is allowing, if after all of that, you still end up with, because you went to a cheaper school and your parents had saved like maniacs, okay, and you end up with money left in your 529, you can roll it. After 15 years, you can roll over any unused money from a 529 to a Roth IRA for the plan's beneficiary. So, little Susie Q, your daughter, has a 529, and little Susie Q doesn't use it all. 15 years later, Susie Q can have a Roth IRA and roll the money into that with no penalties.
This is so exciting to me.
That's a really good thing.
Yeah, especially as a parent. I mean, that's a discussion we've had in our house and just a conversation and a thought process. And it's like, wow, that is a huge change for parents.
Well, it takes away the whining that says, I'm afraid I'm going to have too much in my 529, which never freaking happens. But it could happen hypothetically. And if it did, number one, if it was because of scholarships, you should have pulled it out right then and not paid any taxes, doing what we just told you. That's already on the books. But now this act, the Secure Act, signed by Biden, thank you, President Biden, good piece of legislation here. I think everything in this piece of legislation, but one thing I like, we'll cover that another day. But these two student loan things, one is the employer can now match what you pay down up to $3,000 into your 401k. Nice benefit. And two, this is even more important. If you had 529 money left over after 15 years, you can roll any unused money from a 529 plan into a Roth IRA, the student to the student, okay? Not to mom and dad's Roth IRA, but to the student's IRA, this is just very cool.
Yeah, it's another way to set your kids up for success. And again, like you said, to take those excuses off the table. There's not a reason not to save for college if you're in baby step 5, and you think your kids are going to go to college. Like, that's a great thing to do, and you don't have that fear anymore. There's not that reason to hesitate.
I am Dave Ramsey, your host, and I am sitting here amazed and appalled. Amazed and appalled. It was just 20 minutes ago that you people were struggling through the Great Recession, that the world was coming to an end. Oh, we're all going to die. Don't you remember? General Motors is too big to fail. We have to bail out the banks. We have to bail out the car companies. The world is coming to an end. The consumer is covered up in credit card debt. The huge banks are writing off credit card debt to the tune of hundreds and hundreds of millions of dollars because they were failing and the consumer couldn't pay their bill. That was 20 minutes ago. I mean, this is 2008. This is 2017. I mean, it was just the other day, guys. 2007, 2008, 2009, you remember all this stuff. Some of you do. I mean, I am getting old that these cycles are coming through so fast because it was 20 minutes ago that consumer debt and the failing economy was about to bring the entire nation to its knees. Did anybody not learn anything? This news report just comes through. Americans now have the highest credit card debt in history. Translation: you didn't learn anything. Unbelievable. Consumers just hit a scary milestone. They now collectively have the most outstanding revolving debt, summarized as credit card debt, in U.S. history, according to a report released Monday by the Federal Reserve. Americans had $1.021 trillion in outstanding revolving credit June of 2017. This beats the previous record that was set when? April 2008, when consumers had a collective $1.02 trillion in outstanding credit card debt. Credit card debt, revolving credit, has been growing at an annual rate of 4.9%. One reason is more consumers are getting access to credit cards backed by major banks and issuers in recent months. Did you people learn nothing in the banking world? That loaning broke people money is not working out for you. And you broke people, did you not learn anything that these banks do not have your best interest at heart? Did you learn nothing? Nothing. I mean, stupid on parade. That's what this is. And for the first time since the Great Recession, lenders have given more consumers with, here we go, subprime or below average credit scores access to credit cards. For the first time in 10 years, basically. There was a point back there about 15 years ago where dogs and dead people were getting credit cards pre-approved in the mail. We had one guy in Virginia signed up for one fraudulently. He shouldn't have done that, but he did. He got a credit card issued, sent to his mailbox to the name Buck Naked. Rover the dog got one in New Orleans. We got all of these. We used to collect stupid butt banks like Wells Fargo, like Chase, like Bank of America, that would issue these credit cards blindly to these accounts and then shake their head and wonder why they lose money. But they were making so much money on you people that are paying them so much interest that they could afford to write off all the fraud and they could afford to write off all the bad accounts where they give accounts to somebody that's barely breathing, doesn't have two brain cells to rub together, which apparently is a whole bunch of people just reading this article. Unbelievable. This year, total household debt, including housing, auto loans, and student loan debt in the U.S. has surpassed the 2008 peak. Student loan debt's over $1 trillion. Car debt's over $1 trillion. I've not learned anything. They're issuing the cards to subprime. The subprime auto market is alive and well. Now you can get a 9-year loan on your car at 38% interest. But, buddy, you got you some wheels. You're an idiot. Just an absolute stinking idiot. Unbelievable. Dave, I pay my credit card off every month. I don't know if I agree with you. Really? Really? And that's causing you to build wealth how? Not at all. You know, and here's the deal. According to all the data, 9 out of 10 people do not pay their credit card off every month, and everybody walks around saying they do, so somebody's lying. And you're not lying to me, you're lying to yourself because you're stupid. That's who you're lying to. So here's the thing. The debit card will do everything the credit card will do except get you into debt. I've traveled all over the world with my debit card. I have no issue with it at all. Has the exact same fraud protections. Have no issue with it at all. But there, it is no accident that we are at over the record level now of credit card debt in the history of the world right now. Unbelievable. Unbelievable that you stupid banks didn't learn anything, and some of you stupid consumers didn't learn anything. You're doing the same stupid stuff, and you're going to run your car straight into the wall, NASCAR engine up in the stands. Everything's just completely disintegrated. Your life is a shatters because you're doing this stupid stuff over and over and over again. Wake up, America. Wake up. It's stupid on parade. Buying crap you can't afford with money you don't have to impress people you don't even really like. You wander through Target, you wander through Costco, you wander into restaurants buying stuff and buying stuff and buying stuff. You spend like you're in freaking Congress. And you feel the pain, not at all. You stick your credit card right there in the little slot and you type in your little number, or you run it. Either way, swipe it, swipe it, swipe it, swipe it, swipe it, and then can't figure out why you're broke. You make more than 3 times as much money as your parents. Your lifestyle is 6 times what your parents were, and you're broke. You make all this money, you look good, and you're broke. It's because you're stupid. Because you're walking around this plastic in your back pocket thinking that makes you look like you're somebody. It's straight up stupidity. The only good news in this is, not only will I always have a job, the next generation of Ramseys will also have a job. All these Ramsey personalities, we're going to be working at this for decades, because about the time we make a little headway on it, everybody goes back into stupid, like a lemmings over a cliff. If you don't know what that is, it's a small rat that runs in herds, and they run over a cliff when they all get panicked. Well, there you go, lemming. Don't be sheeple. Unbelievable. Stupid. God. New record in credit card debt. I just don't believe this. This is the Dave Ramsey Show. Hey guys, thanks for watching. If you enjoyed this video, click the subscribe button to get the latest content and check out these other great clips from the show.
Hey guys, I'm your host, Rachel Cruz, and you're watching Dave Ramsey's Greatest Hits, where we're looking back at the best moments from the last 10 years of The Ramsey Show on video. For this episode, that includes some conversations we still think about to this day. And I'm talking about heated debates, massive debt, and a situation that even freaked Dave out. So let's get to it.
Violet is with us in Kansas City. Hi, Violet. How are you?
Great. How are you doing?
Better than I deserve. What's up?
Hey, so I am just recently engaged, and my fiance, he actually lives in Dominican Republic, so he doesn't have a lot of money. It's like a third world country. I am $42,000 in debt, and I want to get married to him, but I'm just nervous because I know I'm on like step number 2 of paying off my debt, doing the debt snowball, and I'm just wondering if it's a good idea to get married knowing that I will have student loans left to pay.
I don't mind folks getting married in debt at all or having babies while they're in debt at all. None of that is a problem for me. The only problem is if you're not on the same page that we're going to kill the debt.
Right.
And we're going to both work like maniacs to cause that to happen. So has he got a job?
He did have a job as a mechanic, and then for some reason now he doesn't have it anymore.
Some reason? That sounds kind of vague.
Yeah. I mean, his explanation was that their management got hired on new people, so now he doesn't have the job. So that was his explanation.
Okay. And how long have you all been dating?
We've been together for 9 months.
And how old are you?
I'm 23.
And he is how old?
He's 22.
And he's from the Dominican Republic?
He lives there. Mm-hmm.
He lives there?
Yes.
Where,
we have a long-distance relationship.
Where would you live were you married?
So once we're married, we'll have the process of him coming here.
Right.
Yeah.
Okay. And he was an auto mechanic in the Dominican Republic.
He's a mechanic on whatever. Like, I'm not sure of like what he specifically did. So there's like the language. I'm learning Spanish. I'm intermediate to fluency, and he doesn't know any English. I know this sounds weird, but my understanding was that he is just basically a mechanic. I've seen pictures of him going to work and all that stuff. I'm not sure what he specifically worked on.
Mm-hmm. How many times have you met him in person?
4 times.
Okay.
I go back and forth and travel over there.
Right. Okay. All right. Well, here's some things. I don't mind you getting married. I don't mind him coming here, and he's going to get a job, and you guys work together and make a lot of money and pay off the debt and live happily ever after. Okay? Mm-hmm. That's one option. I am obligated, because of this show, to tell people what I would do if I were in your shoes. I have a 30-year-old daughter and a 34-year-old daughter and a 27-year-old son. So I've got kids older than you, okay?
Yes.
That are all married. And I've been in the Papa Dave chair, we call it, quite a bit over the years. And so I'm going to change hats from financial guru to Papa Dave and tell you a couple things that I would tell you if you were my daughter, okay?
Okay.
Number one, it has been known to happen that folks who want to come to this country will do anything to get to come here, and anything includes talking someone and conning someone into marrying them. So I'm not saying that's happening, but that flag went up in my head hearing this story. So I want you to just be careful, be wise, and be very aware. Do not be a naive person who gets taken advantage of and you call me back later with a disaster, please. I don't want pain to come to your life, okay?
Yes, sir.
Okay, so you watch for that. Number two, sometimes people from other cultures will work rings around Americans. Their work ethic is 10x of the typical American. Sometimes from people with other culture are hound dog in the sun, lazy on the front porch, don't work much people. Mm-hmm. I'm not hearing things I like in your description of his job and his job loss. I've seen pictures of him going to work. Statements like that scare the crap out of me as Papa Dave for my young daughter I'm talking to, okay?
Yes.
Like, I want some, as your surrogate dad here for just a second, I'm not, but I'm just speaking like that, okay? But I want some proof that this young man is a diligent, hardworking young man and that he didn't lose his job because he was smoking so much reefer he couldn't crawl to work. Mm-hmm. I really want to know that before he marries you, because I want you to have a good life. So I want you to know that you know that you know that he's marrying you for you, not for an option at citizenship. I want you to know that you know that you know that this young man is a diligent, hardworking young man who's going to serve and love his wife well by working his fanny off once he gets here, and that he has a track record of doing that, not just promises. And you have a language barrier and a culture barrier to figure all this out in. This whole process is fraught with danger. It can work, and it might be okay, and I might be just being paranoid. I do have the gift of cynicism, but but I'm just, this is what I heard in a short conversation, and so did 16 million people listening to this conversation. They're all going, Because I wasn't the only one that got scared when you started talking about this. So you got a language barrier, a culture barrier, and a couple of con situations that you need to make sure are not cons before you go forward. If this is a stellar young man and he is all that he claims to be, and he comes here and works his tail off for the good of his family and his wife, you will be just fine. I am not worried about your debt at all. You will work your way through that. I hope you didn't take that wrong, because I did take my muddy boots and walk all through your house there. But that's just what I do, just because I care about you and I want you to win. And I don't want to just drive by this and act like I didn't hear those things, because I heard them. So you be good, and I hope this works out. Please be wise, wise, wise. And wisdom is different than intellect. Please get somebody else in your life to walk with you that looks in on this from the outside, that loves you and that has wisdom. Whether it's a dad, a mom, a sister, a brother, an uncle, a pastor, I don't care. Have somebody look over your shoulder and make sure that you don't have stars, lovey-dovey stars in your eyes and you're blind. Do that for yourself as a gift to yourself. That's what I would tell you if you were my own daughter. I hope that helps you. Well, the Dave Ramsey Show's changed a little over the years. I just used to answer questions from my friends. Now they're all my kids. Okay. That's what happens when you get old and you keep doing a show for 30 years. You guys all used to be my peers. Now with YouTube, they're all 22. Oh, my God. Oh, well, that's what we do here. Hey, I'm going to answer the questions here. If you don't want that kind of advice, if you don't want me to tell you what I think, if I were you, what would I do in your shoes? Don't call, because I'm obligated once you asked. Russ is with us in Salem, Massachusetts. Hey, Russ, welcome to the Dave Ramsey Show.
Hello, Dave. How are you?
Better than I deserve. How are you?
I am good. Dave, I posted some things on your website in regard to insurance philosophies you put online. And having been an insurance broker for about 35 years, there are a few misstatements that are on there that I'd like to use the air as a chance to maybe either clarify with you or maybe get some clarity from you on. May I do that?
Sure.
Okay. Number one, you have said on your website that term insurance is the best and the only kind of product people should buy in all instances when they need life insurance. And what I can tell you is that we do not recommend whole life insurance across the boards. We recommend life insurance situationally. There's no two needs, no two situations that are pervasively similar. Okay? Can you hear me all right?
Yeah, I'm hearing you. Yeah.
Okay. Number two, the cash value that you've talked about is
Wait a minute, did you want me to address that one first?
It's up to you.
Okay.
If you'd like to, I'll be happy to do it one at a time.
Well, you're an insurance agent, obviously, and I disagree when you say there are no two instances that are the same. There are basic principles of mathematics and basic principles of personal finance that are always the same. For instance, I would tell you there is never a time that you would use a credit card.
Mm-hmm.
You can't say that you can't convince me that there's certain times you should use a credit card. They suck. They're a bad product. They don't work. And I think the same thing's true of whole life.
Mm-hmm. All right. Well, let's take it a little bit further. Number two, there seems to be some question about the cash value of a life insurance policy as being a bad investment. And I won't get into the issue of performance, but I think the big thing that you need to realize is this. The cash value is not there because insurance companies are creating a standard of return or investment that is deemed to be poor or is deemed to be immovable. The cash value
then why would you do it?
Policy is there. It's a function of law. It involves.
So why would you put extra money into a policy to create cash value if the cash value has no standard of excellence at all on the rate of return?
Well, you didn't let me finish. Those policies historically get better as they get older. Okay, the cash value of a life insurance policy is a function of state law. It's a function of statutory reserves.
Sure.
And also from an actuarial standpoint, it's used to keep premiums level indefinitely. Why do you think term insurance is so cheap? Because term insurance does not have or maintain a legal reserve affixed to it.
Well, sure it does. They have to have cash reserves to support. Otherwise, the state won't license the term insurance company. Now, it's a 20-year level term. 20-year level term insurance is about 1/5 or about 1/20th the cost, about 5% the cost of the same amount of whole life is.
You're right, but from an actuarial point of view, whole life is considered to be a product priced indefinitely that does not have.
Yeah, but it never stays in place indefinitely.
That depends upon the person, and that depends upon the situation.
All the research shows that they cash them out like crazy.
Not everybody.
Yeah,
I can tell.
Yeah. The vast majority do. But let's just pretend you kept it for your whole life. Why the flip did you need it for your whole life?
How about some things called estate taxes? There are people who do, when they die, see their family incur a substantial financial loss.
And so in order to cover estate taxes, I need to get ripped off for 60 years in a horrible financial product. That's your theory.
Well, let me just say this. If you talk about the difference of investment, why don't you talk about the difference in, for example, in attorney's fees? There are attorneys who charge $300 an hour versus $700 an hour. You don't tell somebody to invest the difference in legal fees to see if they come out ahead, do you?
Of course I would, if the actual if the actual legal advice was exactly the same.
Well,
if you die, you get paid with term insurance. Your beneficiary gets paid. Pretty simple formula. If you die with whole life insurance, your beneficiary gets paid only the face amount after you've paid 20 times more for the policy.
I can refute that very easily.
No, you can't.
If a policy is arranged properly, a person can receive not just the face amount of the policy, but in addition, they can receive the value of the cash account.
No, they can't. Not unless not unless it's an AB universal, in which case you paid more for it to start with.
No, you do not. That is not true.
Are you talking about paid up additions?
Pardon me?
Are you talking about paid up additions?
No, I'm not talking about paid up additions. Did you ever have something called the fifth dividend option?
Sure.
Okay.
Absolutely.
What is it?
Well, absolutely. The bottom line is, at the end of the day, the people don't get the cash value. You pay 20 times more, and the cash value is not added on. Now, I mean, you can look at every major whole life company that's out there, and you tell me they get their cash values. They don't get them. Russ, it's a piece of crap.
Listen, are you talking about the beneficiary?
Listen, here's the situation, dude. I can talk to you for the rest of my life, and I'm not going to talk you into not selling whole life.
I'm not even talking about whole life of term. I sell a lot of term, bundles of it.
But you still sell the other crap, too, and you're offended because I said it's crap.
Now, let me ask you another question. Yeah, by the way, for your information, just I'm not arguing with you, but the cash value, the amount of the value on top of the face of the policy can be paid to the beneficiary if the policy is written appropriately.
None of them are written that way.
Well, I've written them that way for 35 years.
No, it just doesn't happen, dude. You and I know that is not how the industry is set up.
Well, believe me, it is. The other thing is, you said that, you talk about whole life as being such a horrible product. And again, maybe in your mind it is, but can I ask you this question? Mm-hmm. Why is that particular product that you think is so deplorable, bought by many publicly held companies and privately held companies to fund buyouts of corporate stock? And
there's a lot of buy-sell agreements that use whole life, and you know why? Because people like you sell that crap to them.
No,
that's exactly why they do it.
Do you know how much?
A simple partnership buy-sell agreement can be funded with term life insurance for 1/20th of the cost.
Well, let me ask you this. Do you know how many publicly held Fortune 500 companies use whole life and the millions of dollars the boards of directors authorize for that?
And it's really sad that they're all getting screwed at that level.
Well,
it really is, because it's garbage, Russ.
From very prestigious business schools, I think they know a little bit more than the layperson.
Well, they may or they may not. But the bottom line is that at the end of the day, dude, it is the payday lender of the middle class. It's a horrid product. When you pay 20 times more for the same amount of coverage to build up a cash value that you never receive, because when you die, they pay the face amount. James is in Lexington, Kentucky. Hi, James. How are you?
I'm pretty good today, Dave. How about yourself?
Better than I deserve. How can I help?
Well, got myself in quite a mess right now, and I'm not really sure where to start to get out.
Okay.
To start with, I have currently about $430,000 in student loans.
Good Lord.
Yes, I was in medical school. I had failed 2 sets of boards after 3 years, and then was recently dismissed. And so about 80,000 is from undergrad, and then other courses later on to get into medical school, and the remainder is from medical school. But right now I have the debt, but no degree that I was planning to use to actually be able to pay that back. So at this point, I don't really know what my options are to try to dig out of this.
You're right. That's a mess. I'm so sorry. That's scary.
It is.
Yeah. How did you get that far into it and then not be able to pass the boards?
I actually did fairly well during the first 2 years, but it was just, I think, being able to, I guess there's one thing to take an exam every few weeks or every month, but being able to retain that and then to recall it to the level of detail that I needed for the exams. I just couldn't put it all together at the end.
Is there any way you can re-engage and still have a shot at finishing?
Not without having to reapply and then go through the process all the way again. And also have to take out more loans.
Mm-hmm. So
yeah.
what are your when did you flunk the last one?
That was this past spring, and so I was let go this summer.
Okay. So what since then? What has been your plan?
Well, I've basically just been getting by. I was able to find a job, first of all, as a substitute teacher, and I was hired as a high school biology teacher. But my loans are on deferment right now, and I have some forbearance to go. But at this point, I'm not sure any of the other career options. I've thought about, physician assistant, other programs like that, but it requires going into more debt. Because I'm not in a position where I could work and then pay as I go. Plus pay off the current, the loans I've got now too.
Yeah. So what would it take to be a PA from where you are?
I would have to take about another year of classes. I would have to take some other entrance classes, and then 2.5 years for the program itself.
Wow.
And then and that's probably at least another $60,000 to $70,000 in tuition and living expenses.
What about nursing?
It's my undergraduate degree was in biology, and then I did pre-med.
And so none of the med school work you've done applies to anything else.
No, none of it. I have the debt, but none of the courses, none of it actually, I can transfer to anything.
Wow. Well, I mean, the only thing I know to tell you is to try to assess some kind of a career, and that's what I'm poking at here. I don't know enough about that world to try to help you, but we obviously need to get to the point that we're making some good money to begin to pay this through, right? And so I want to lead you towards something that's 6 figures to try to plow through this with, and or get on maybe with some kind of a hospital type of a company that would do some student loan pay for you as part of your signing bonus, that kind of a thing. Obviously, you're not going to be doing that as an MD, but the PA idea is a good idea, something around the biology or medical field, but I want to move you well beyond high school biology teacher to pay off $430,000 in debt, right?
Exactly. And the other issue, I mean, right now, I'm 34 years old, and so I have all this debt and I have an emergency fund, but no retirement savings, nothing at all. So I don't know.
Well, I'm not worried about that until we address your income. Okay. We got to address your career track, which gets you to your income, which solves the debt problem and then solves the retirement problem. I'm not in a panic about that today. I mean, if you were 66, I might be, but you're not. You got time to work through that. You've just got to reset here. Natalie is with us in New York. Hi, Natalie. How are you?
Hi, how are you, Dave? Thank you so much for taking my call.
Sure. What's up in your world?
So I am recently married, just a few months, and we are talking a lot about our finances. I paid off my student debt a little while ago, and now we have his to work on. It's $300,000.
Mm-hmm. Oh, my God. Is he a doctor or a lawyer?
He's a doctor.
Okay. So what is your household income now?
Well, it's about $230.
Good. So you're going to live on nothing and pay that off real fast, right?
Well, yes, but he's finishing residency, so my income is $150 and his is about like $70 as a resident. So we're looking at job opportunities in 2 different areas, and they offer one pays about $500,000 more.
One job is $500,000 more?
Yes.
Okay.
But it's in an unideal location, which we would not stay in long term. So we're just wondering if it's worth it to take, a job that pays that much more just to get out of debt quicker and kind of postpone.
Okay, so job number 1 pays what and job number 2 pays what?
About $850 versus $350.
Okay, and you make $150. Would you make $150 at either one of those locations?
Maybe a little less, maybe $100, I would say.
Okay, so that's kind of either place you'd make about $100. So you'd leave New York City.
Yes.
In either case, and so what is the less than ideal location that's $500,000 more? That's
it's kind of in the tundra. It's up north near Canada.
In Canada?
No, near Canada. It's
okay,
still in
but
the
it's
US.
in the United States.
Yeah, so he's a surgeon. So once he completes training, they offer some of these jobs in underserved areas.
Yeah.
For a lot more money.
Yeah, I never heard of $500,000 more, but I knew underserved would overpay. I knew that, but are they asking for a length of time commitment?
Yeah, they asked for 3 years.
Okay, and you would be willing to do the 3 years?
I'm not sure. So I want to know your thoughts.
Well, you already live in New York City. It's not like you live in the South. I mean, you're used to cold weather.
Yeah, but it's just kind of a whole lot of nothingness.
Okay, all right. So there's just not So you're moving to a very rural,
middle of nowhere,
a very rural location versus New York City. So that's a big culture shock. I got you.
Exactly.
Okay, all right. Well, I mean, I don't know. You got to ask yourself that question. You're going to be making $450,000 in a worst case scenario, right? Exactly. And so, my God, I mean, if you can't pay off $300,000 in the first year, somebody ought to smack both of you. If you can't live on
have a lot of stuff.
If you can't live on $150,000, somebody ought to smack you. Really? Don't you think?
Yes.
Yeah.
Yes, we haven't bought a house yet. We haven't.
I know you don't need to buy a house. You have $300,000 in student loan debt you need to clean up. So, I mean, if you go make $450,000, I think you're going to work this out. You could be debt free in 1 year, and the next year you buy a house, and the next year, you do some other stuff. I mean, just have a little bit of patience with that kind of shovel. You ought to be able to move anything you want to around. The other way, you come out $1.5 million ahead, $500,000 times 3 for 3 years. But you're in the tundra. You could buy a whole lot of airline tickets out of the tundra and come visit, go visit New York City every weekend and come out ahead.
Yeah, because we're a little older, so we were worried about, not having any retirement savings, not having anything yet.
You'll be okay. You're going to be making $500,000 a year. As long as you don't go spending and do stupid doctor tricks with the money and, go another $400,000 in debt to do something else. But if you guys will just stay debt-free, you're going to have tons of money to invest. You're going to be fine. You start banking $200,000 a year. You know how quick you have $1 million? It's like 4 years. You're okay. You're going to be all right. As long as you don't keep, jack your lifestyle way up. So the only thing I would take the $450,000 cheaper job if you're committed to getting out of debt in 1 year.
Mm-hmm.
If you're not, you need to go do the other one.
I think we could do it in 1 year, maybe 2.
I think you can do it in 1. I really do. I mean, or not plus or minus taxes. Taxes might push you into 2. But I don't want you to jack your lifestyle up or start doing a bunch of other stuff till you get this debt cleaned up. No, job one's get the debt gone before you do anything else. Don't talk to me about buying a house, buying a car. Don't buy anything. You're broke and in debt. Hundreds of thousands of dollars. Clean that mess up, and then you're free to live the rest of your life and do whatever you want. Now, the only thing that, if Sharon and I were looking at this, my wife and I were looking at this situation, we would consider the Tundra opportunity, but we would put in there a couple $100,000 or $100,000 out of that 500 in travel, and we would just bug out of there virtually every weekend.
Yeah. Well, as a surgeon, that's not as easy, I guess. He's going to have a lot of call and everything.
But he's not on 7 days a week.
No.
Okay. So, I mean, just jump on the plane and go. I mean, even if you charter a plane out of there, you can go, you can have a life is my point, and you don't have to define your life as like you're living on the moon and you can't come home.
Yeah.
You can jump on a plane and be anywhere in some period of hours, and just, enjoy some downtime, head down to the Caribbean, head down to Cabo for the weekend. I don't care. You can do a lot of that kind of stuff on $500,000 and still come out ahead if you wanted to play that. That's how we would play it. Because I'm like you.
Put away a lot of money.
Yeah. I mean, I'm pretty relaxed nowadays, but if I were your age and I was concerned about, New York type of activities, then that's a way to do it, is to budget it and still say, okay, we're going to spend $50,000 on travel a year or $75,000 on travel a year. And that's our way of dealing with the fact that we're in the Tundra and we're making all this extra money for at least 3 years. And if you wanted to do that, that's a way to make it palatable. I'm not sure I would. I think if you're making $450, you ought to be okay. And you'll probably make not $450 for all 3 years. You'll probably make $450 the first year. Your income will probably go up. His income will probably go up the second year. So you're probably back up over $500,000 easy between the two of you then. So, but kiddo, whatever you do, get rid of this debt before you do anything else. Do not go buy a house until this debt's gone. Do not go buy a car until this debt's gone. You hear me loud and clear on that. I'm going to call you stupid if you do. Straight to your face. This is the Dave Ramsey Show. Well, on every one of my social media feeds for the last 5 days or 4 days since this article hit, people have been exploding. Their brains are frying out of their heads over this article in the Wall Street Journal. Mike Maru has $1 million in student loans. How did this happen? Mike Maru, a 37-year-old orthodontist, made a big investment in his education, and as of Thursday, he owed $1,060,945 in student loans. Mr. Maru pays only $1,589 a month, not enough to even cover the interest, so his debt 7 years at the University of Southern California grows by $130 a day. In 2 decades, his loan balance will be $2 million. He and his wife, Melissa, have become numb to the burden, focused instead on raising their 2 daughters. If you thought about it every single day, Ms. Maru said, you'd have a mental breakdown. Due to escalating tuition and easy credit, the U.S. now has 101 people who owe at least $1 million in federal student loan debt. 5 years ago, it was 14 people. While the typical student borrower owes $17,000, that's not true, it's 37, the number of those who owe at least $100,000 has risen to 2.5 million. The government essentially allows graduate students to borrow any amount to cover tuition and living costs, with few guardrails on how the final sum will be repaid. These are choices. We are not coercing, says the dean of USC's Herman Ostrow School of Dentistry, where Mr. Moreau went to school, which is one of the most expensive dental schools in the U.S. You know exactly what you're getting into, says the dean. Dental school is the costliest of higher education programs in the U.S., an average of $71,820 a year. The USC program now costs $91,000 a year and $137,000 when living expenses are included. Halfway through dental school, he said he started to worry about the soaring costs of his education. Why did it take halfway? You're in the most expensive dental school in the U.S. I'm sitting here saying, holy crap, should I really be doing this? Mr. Maru called. Should I drop out? Miss Maru, 35, said her husband and her decided it was too late to turn back If he quit or transferred to a cheaper school, he still owed for the loans he already had. Yeah, so the cheaper school would keep you from doing what? The USC education helped Mr. Maru earn $225,000 last year. No, being a dentist helped him earn $225,000 last year, working for a corporate practice in Draper, Utah, outside Salt Lake City. That compares with $158,000 median income for dentists. Some dental school educators fear that the eye-popping... Oh, let me help you all with that for a second. That's a misnomer. Let me stop just for a second. The median income for dentists is $158,000, but not for orthodontists, and he's an orthodontist. So let's learn the difference here. It's $225,000. He's not making extra money because he went to USC, where he went to school did not increase his income. He went to the most expensive school, and he makes an average income. Note to those of you who want to go to an expensive school because you say it's going to cause you to make more money. It doesn't. Anyway, moving on. Some dental school educators fear that the eye-popping cost to enter the profession could dissuade good prospects from even trying. Ya think? Dental school's financial aid director estimated that the basic 4-year program would require $400,000 to $500,000 in student loan debt. Mr. Maru and his wife concluded dental school is a good investment. We're like, well, we can make this work. Yeah, made sense to me. They took it out on a lower interest rate. Long story short, the interest rate went up. They got themselves in trouble. A law passed in Congress in 2001 severed the link that tethered student loan interest rates to Treasury rates, and the rates went up, causing him to get into a bigger mess. The one luxury I'm skipping along was buying a used Mercedes-Benz, which carries a payment of $390. The couple then bought a home using a $400,000 mortgage Miss Maru took out in her name. She used an inheritance from her grandfather for the down payment, and her mother co-signed for the loan because she's married to a broke dentist. Mr. Maru then entered into a government-sponsored repayment program on the loan, where after 10 years his loan will be forgiven. But when you add up everything he's paid in, he will have paid back $1 million even by then. And then you and I will eat the other $1 million roughly. Since refinancing his debt with the federal government in 2015, Mr. Maru's balance has grown by $150,000. It will keep growing through the 25-year life of the repayment plan until it reaches $2 million. The sum will be forgiven, and at current tax rates will cost him another $700,000 in income tax for forgiveness of debt. The government repayment plan affords the Maru family a comfortable life. Their home is on a mountain with panoramic views of the snow-capped peaks surrounding Salt Lake City. They take vacations, including a recent trip to Havana, and they drive a used Tesla. Yeah, it does make your head explode. Extreme things like this always do make the news. And obviously this is an extreme thing, but what it does point out is a whole bunch of things. One thing it points out is that you and I are stupid, America. We're stupid because we elected a Congress that allows a student loan program like that to be in place because you and I are getting ready to pay this guy's bill. These are federally insured student loans. The taxpayer insures the student loans. No one else gives unlimited lines of credit to 18-year-olds on unsecured debt except you and me. No banker in his right mind would give this, and bankers loan money like hot potatoes. They'll loan money to a dog that's dead, and they won't loan money to you. But no, you and me, we're so bright. We think the students, college education is so important, and the whole economy would collapse, and America would be a bunch of illiterates if we don't step up and if we don't step up and insure these student loans. So I'm telling you, you need to call your congressman based on this article right here, which wakes you up, and say the federally insured student loan thing needs to stop. You want to stop colleges from overcharging? It's real simple. When nobody goes there because they're too freaking expensive, their rates will drop. But when they have an unlimited supply of money from the government insured by stupid people like you and me and signed up for stupid people like this guy who didn't even add up what his costs were going to be until he was halfway through, this is a whole group of stupid people in a pile. Stupid colleges overcharging, stupid taxpayers that are willing to sign on for this guy, because you and I are going to pay this. Your tax money is paying this guy's bill. Because we're stupid. Because only stupid people loan people like this money. So we're stupid. We guaranteed this loan. It's a federally insured student loan. The student loan program is a freaking disaster. Mike Maru's life is a disaster. So, Mike, you're in Salt Lake City, my man. You're in a hurt. You're in a world of hurt. You've become the laughing stock of America after this article. I'm so sorry. People are probably writing him hate mail like crazy. I'm not going to write you hate mail. I'm not going to pile on. I've done dumb things too.
Okay, you guys, if you had fun with this episode, there's more where that came from. Because up next on Dave Ramsey's Greatest Hits, we've got even more Dave rants. So make sure to check it out and share this video with a friend who you think would enjoy it. Thanks for watching, and I'll see you next time.
Brought to you by the EveryDollar app. Start budgeting for free today.
I am a 40-year-old widower and ready to date again. However, my truck is 25 years old, and I perceive the ladies I want to date will judge me based on the vehicle I drive. It shouldn't matter, but as a guy of average height and average appearance, I don't have the charisma to overcome a poor first impression. The question is, should I spend $5,000 to $10,000 to buy a car for the sole purpose of dating to find my future wife?
Wow. There's a lot going on here.
Jim, oh my gosh, I cannot wait to talk about this. It's a great question. It's a great question.
Okay.
Jim, where are you at financially?
No debt, no mortgage, no kids.
No debt, no mortgage,
What's
no
your
kids.
net worth?
1.3.
What do you make?
$132,000.
Regardless of women, you should get a better car.
Oh, okay.
Your car sucks. You're a multimillionaire. Go get you a dadgum car, son.
Oh.
Okay. And then the women is a different issue. But yeah, I mean, really, you got $1 million. You don't drive a 25-year-old pickup truck. I mean, you can, but there's no point in it. And so I would go get a better car, but I would not ever purchase a car to attract a lady, because you're trying to attract the wrong kind of woman at that point. You don't want a woman who comes to you for the car.
Correct.
Not a good connection. So no, I mean, we want her to love the Jim that Rachel and I already love. Dude, you're a great guy.
You impress one person. I just don't know who that is yet.
No, it's okay. You don't have to. If you impress them with a car, it's the wrong woman.
Have you had dates, Jim?
That's called shallow woman.
And you've gotten feedback about it? I'm just curious what's causing you to think it's the truck.
I
right?
have been on a second date that was going, I thought, very well. The conversation was good. And when we walked out to the parking lot, she said, "Oh, you're driving that?" And I never heard from her again.
But she doesn't.
So now I hide the truck on the other side of the parking lot. I'll walk her to her car, leave. And
but hey, listen, that's a good thing that you ran that one off.
Okay. Can I say this?
I mean, seriously, are you gonna marry? Do you want to marry somebody who judges you by your?
No, no, I'm not saying.
This is a shallow
oh my gosh.
chick.
Can I? Excuse me. Let the woman talk for a second.
All right, have at it, woman.
Here's what I would say though, Jim. Not that it's shallow, but you would wonder, out of curiosity, like, oh my gosh, am I gonna have to be the one that keeps this household afloat if it goes in the future? Like, if she doesn't know your financial state, again, it's not a judgment on just like the car itself, because there needs to be more conversation. But I would think as a woman, though, I'm like, I don't know. Am I gonna have to be the breadwinner for? You know what I mean? Like a level of.
Are we going to be on food stamps because he drives this truck? That's the question.
I don't know. Yeah, I mean, like, so the first impression thing, again, it's not for a shallow purposes, but for her to know, like, no, you're responsible, and you know, all of these line up. Oh, then I don't care what kind of car you drive. I just know the man that I'm marrying, I'm entering into a relationship with, that I'm not having to be the one to like hold us up financially.
So
right?
if you go to Branson, Missouri, and you were to visit the Walmart museum on the square in Branson, Missouri, one of the things that's in there is Sam Walton's ancient pickup truck that the billionaire drove to work every week.
Which is
and if you
great.
walk off from him because he drives that pickup truck, you would be known as a financial moron. I mean, seriously.
I know.
Honestly.
Yes, I'm not saying not to date someone that has a crappy car. It's not that. It's just to know that, like, oh yeah, you are a guy that can, hold life on his own. Like, that's And you really do, Jim, because of your because of where you are financially. I'm not saying to go buy a new truck for those purposes. I'm just giving another perspective to think, oh my gosh, is he doing anything with his life, right? I'm not saying that you're not, Jim. Does that make sense, anyone? Am I making sense, or am I sounding shallow?
Yes, it does. I'd rather have the opportunity to evaluate her character directly than she dismiss me based on a false
100%.
And if she's willing to
100%.
dismiss you
Then-
without learning more about your character
Yes.
based on the truck, this is
We
not
don't want her.
marriage material.
I agree.
I
agree.
Send her back to the digital thing that she came from. That's all good. Go away, chick. And that honestly, you dodged a bullet.
The digital thing she came
dodged
from.
a
A dating
bullet.
app.
You dodged a bullet. Okay, so but all that anyway. All that aside, I think you ought to go get a better car for you.
Okay.
For you. And you could drive the pickup all you want to drive it, but I think you ought to have a better car in the driveway for you. You've earned it. You do not have to drive a piece of crap anymore. You live like no one else, and now you can live like no one else.
Right, with the status symbol of choice, a BMW.
No, that's not the status symbol of choice. The status symbol of choice was
Is
a
it pay
paid
off
off home mortgage.
which, Jim, you've done.
Taking the place of the BMW. But go get a better car. I'm not saying you have to go spend $100,000 on a car, but I mean,
you don't have
you're
to,
driving
Jim.
you're
You don't
driving a
have to. He's-
$1,500 truck.
Jim
I mean,
can be very content. He may be fine. He
ought to get a better car.
He's Sam Walton.
I tell these people all the
He's
time to go
fine.
get a better car. So, but I wouldn't do it. I would never do that
No.
to attract you. The kind of woman you get, the kind of person, woman or man, if you're in a dating relationship that you attract based on your possessions is not marriage material.
Agreed.
Okay.
He looked at me again. I agree.
Well, I was arguing. Well, I don't know what this whole other thing you did a while ago was, but yeah.
It was just to know, like, okay, I'm not having to be the breadwinner, right? I'm like, I don't know.
I don't want to be on food stamps. I got
don't
that.
want someone
I got
that's like, that's like not working
but at
and
least
making an
ask
income.
at least
right?
ask a question instead of saying
agree.
"See ya."
100%
like,
agree. I know.
So you driving this truck because you're a billionaire, or you driving this truck because you're poor and don't work much?
Exactly. Well, it's just the idea of like, I don't know. I don't have to like
You could ask a
hold a
question.
man.
Yeah.
I don't know.
He's 40 years old.
Jim,
You're a great guy,
I'm
man.
rooting for you.
You're a great guy.
And I hope this call, I'm going to just pray this over the internets, that this call, maybe some lady's like, oh, Jim, I'm interested.
There you go.
If you are.
Houston's a little town. Shouldn't be hard to find. You look for the old truck.
Look for the old truck in Houston, Texas. Jim.
Like there's no old trucks in Houston, Texas. There's not a chance you're gonna find.
I appreciate him.
That's
And
so
I really
cool.
do. And I'm sorry you're a widower too. Whatever
Yeah.
that story was. I hope nothing but the best, Jim. I'm cheering you on.
Yeah, me too.
I hope you find a great lady out there.
Me too.
We should do a Ramsey dating app.
No. It would end up like this call.
What do you mean? Terrible advice.
This is bad advice from both of us.
I think so.
Oh, we flunked that
wasn't
one.
that wasn't our best call, America.
Hey, it's worth
Sorry
what you
about
pay
that.
for it, baby. This is the Ramsey Show. Create your free every dollar budget today, the simplest way to budget for your life. Brought to you by the Every Dollar app. Start budgeting for free today.
So about 2 weeks ago, my husband lost his job.
Oh, that's so scary.
Communication issue with his employer, who's also the owner of the company. It's a very small company, and he's been working with him for over 15 years. And he got fired over text.
Wow.
I make decent money, but we don't have any savings. I have a 401k. But our expenses alone are about $5,000 a month, and it's just not enough to cover all of our expenses with just my salary. And I'm looking at getting a home equity loan, not a line of credit, but a loan, to hold us over and consolidate some debt until he can find some other employment.
How much debt do you guys
It's
have?
not going to be anywhere close. I have about $20,000 in credit cards. There's 2 car loans. One is about $18,000, and the other one's almost paid off. So there's maybe $1,000 left on that vehicle.
Okay. Any other debt?
3 401k loans that come directly out of my paycheck, and that's about $400 a month, and that's about $26,000.
Okay. So this problem started long ago. Even with 2 incomes, you guys have been unable to keep up your lifestyle.
Yes.
So what's been going on beneath the surface? This job just revealed the house of cards that you guys have built, but it wasn't the issue.
No, our relationship has been broken for probably 15 years. We bought this house in 2017. I was able to qualify for it under just my income. At the time, we had 5 kids living in the house, and my father, who has since passed away. We're down to just 1 child. 2 of our kids don't even speak to us. But I don't want to lose my house.
Yeah. I'm going to ask you, please. Hey, Rosa, listen, you got a ton going on, okay? Let's knock these out one thing at a time, okay? Because real quick, what anxiety does is it begins to go, and then, and it spools on us, right?
Yes.
And you haven't slept in the last week, have you?
Not a lot.
I know. Please do not put your house on the auction block for a short-term problem, okay?
Mm-hmm.
I want to not promise you, but almost guarantee you something. Your husband has not told you the full truth about why he got fired. I saw
the text. It's been a communication issue between him and the owner, and I actually know the owner. We've known him for probably the whole time we've been married, 25 years.
Okay, hold on. You're jumping right back into solutions. I'll back out. Cool. He got fired from that.
Sorry.
There's one solution right now. He's got to get 2 jobs today at Walmart and at Home Depot. And then he's got to drive tomorrow morning. And he can apply for jobs later. Y'all don't have any money. This isn't the time for hacks. This isn't the time for debt consolidation. This isn't the time for putting your house on the block. Because one thing you've proven to yourself over the last 20 years is something always comes up and the worst case scenario usually happens. So why in the world would you put your house on the block?
Yeah, you understand. You take out this home equity loan, you now have a second mortgage, and your home is at risk.
If you miss a payment, they take your home.
Well, I make enough money that I could cover.
You just told us you don't.
Consolidation's going to pay off all these credit cards.
No, don't do consolidation. You're just moving debt around. It's like putting Spanx on. It doesn't make you like if I put on a bunch of Spanx, it doesn't make me weigh less. Right? It just makes a particular pair of pants fit better. It doesn't make me.
They market these products to people who are desperate like you, thinking this is going to be the thing that fixes it all.
That's right.
Or it's going to be a Band-Aid to get us to the next week. And you're going to be calling back a week from now saying, we can't make the HELOC payment. They're threatening us. They're going to take away the home. We can't make our debt payments. So the solution here is, number one, your income, and then your expenses. You said you have $5,000 in expenses. Right now, we're in survival mode. So all we can cover is basic food, utilities, our housing, and transportation to get us to our job. That's the only thing we're doing.
Right.
Anything else is getting removed from the budget. And I can tell by the way you're talking, you guys have never sat down to make a budget, to tell every single dollar where to go. So it starts tonight. We're going to go, here's how much Rosa makes. You're going to pause all investing. Are you doing any investing right now? I'm guessing you can't because you got 3 401k loans out.
I'm just doing the 3% that my company matches. I just lowered it.
Lower it to 0.
Weeks ago, I've started.
Is it at 0?
Okay. Okay.
You need every single dollar you can squeeze out of your income. Do you understand? So 3% matters. 1% matters. So how much will you be taking home after tax, after healthcare premiums? How much can you bring home every month as it stands today?
Let me look real quick here. 4,000.
Okay. So now we have a solvable problem. Our expenses are 5,000. How do we get our expenses down to 4,000 or less this month? And find out how much lower you can get those expenses. And then go, how much more can we make with husband working 3 side jobs this week, doing whatever he can to bring in income? swallowing his pride, doing the side gig, asking people, what can I do to serve you in exchange for money to cover the gap?
He's not willing to do that.
He's unwilling to work?
He's applied for unemployment. So that's what he's been working on. He says he's been applying for jobs and he's had a few interviews.
Is he an able-bodied
He
man?
doesn't have a job yet. Pardon me?
Is he an able-bodied man?
He's got some health issues. He's 57 years old.
But he can go do something. I don't understand why he can swallow his pride and take unemployment, but he can't swallow his pride and go do 2 side hustles.
Right?
I don't understand.
Have you sat down and said, I need you to swallow your pride on this one? Or don't even say that, because he'll fight you on that. I don't have any pride. Can you say, hey, for 3 months, I know you're grinding, but we got to go make some money?
He's counting on this $320 unemployment.
That's
He's
what's
just
going to
trying to
save
stick
this?
it to his old boss. And the moment he gets a job, they cut it off. Like, I don't...
Right.
How much are these cars worth?
One is probably about probably the 18,000. It's a 21 Chrysler, and
Okay.
mine is a 2017 Toyota Camry. But there's, like I said, we only owe 2 more payments on that one, so that one will be gone. And
Well, what's the Camry worth?
I'm thinking probably 8,000 the way it is.
And you
I
owe
have to
1.
keep
So you could
basically-
make $7,000 right there. And you could sell the other car and be, free and clear of it with $7,000 to get you a car. Could you go down to a single car since homeboy's unemployed anyways?
I don't know that he'd be willing to do that either. Like I said,
He doesn't have any
relationship is broken,
choices.
so we don't hardly even talk.
Okay, here's the deal. We can't help you, huh?
You guys lit the house on fire, and he's saying, well, he doesn't want to go. He's warm and cozy.
Yeah, we can't help you if every option we're putting up against he won't, then at some point you have to decide, do I want to be safe or not? And if he is really as unhelpful and won't speak to you and whatever as you say he is, you're in a situation that is unsafe. Get with some girlfriends in your local community that are friends of yours and sit down and walk through the challenges here. You may need to see a local counselor. You got big challenges ahead of you, but please don't take out a HELOC on your house.
Create your free every dollar budget today, the simplest way to budget for your life. John is with us in Los Angeles. Hey, John, how are you?
I'm better than I deserve, Dave. How are you, sir?
Just the same. How can I help?
Yeah, so my question, I just discovered you a couple months ago. I've been so happy to check out all your videos. They're quite entertaining and also quite eye-opening, and thank you for everything you're doing for everybody. It's awesome.
Thank you.
Yeah, so the last couple years, my main goal was to get my emergency fund happening, and I met my goal. I've got $27K in liquid cash sitting in my money market at my credit union.
Good for you.
So, yeah, and to top it off, I'm a self-employed musician, so how about that?
Yeah. In Los Angeles, no less. Wow, this is like a moral accomplishment right here, man.
It's a lot of watching every dollar, and that's the thing that really caught me about your videos. And my question to you today, it seems like I did baby step 1 and 3.
You did.
And now I'm really embarking on baby step 2. Mm-hmm. And so my question is, because $27,000 is about, after I've calculated it, around 5 to 6 months of emergency expenses. If I were to just be out of work totally, that would sustain me for that long. Mm-hmm. But I have right now $8,800 on my car, and then I have $48,000 left on my student loans, which I've chopped down quite a bit. So my question, I'm wondering if I should move some of that $27,000 and just take care of my car right now.
Yes.
Okay.
Now, let me back up before I just give you an absolute on that. How many times have you been out of work in the last 5 years for 6 months with no income?
Oh, never.
Okay. So we're not putting you at risk of being in the street by paying off your car because you got $19,000 laying there. So what I would do is you do have, you're vulnerable to life because you're a single income, highly volatile income or potentially volatile. Because it's just whether you get a gig or not is what it comes down to, right?
Yeah, well, actually, I teach, so I have a private lesson studio. One is through a college, so that's a W-2. But most of my stuff is independent contract work, like touring, and I score music for TV shows.
Okay, so what percentage of your income is extremely steady, like the college stuff and some of the other stuff that you just about 100% know, almost like a real job?
Right. Well, all the touring I do is through my partnership, and that's extremely steady and just continues to go up. So if all of a sudden every single gig ended for me and the show I'm working on just quit, it would go down probably a third or something like that.
The truth is then that you probably need to work a traditional set of baby steps. You probably would take it all the way down to 1,000.
Gotcha. Okay.
Because you're not vulnerable to being homeless. I'm in Nashville, and so I meet a lot of musicians that literally are. They could walk up onto they don't have a steady income. They're working for a band. The band could go, "We're not going out on tour," and you're done till you find another band to work for. And so that kind of volatility is not what you're facing. You've built your career to where you have a steady flow of gigs.
Yep.
And like a studio musician here in Nashville might do, as an example. They've got a steady flow of gigs and maybe doing some teaching on the side. That would be more akin to the guys I know here, for instance, and gals I know here. So I think you're pretty accomplished in your career is what you're describing to me, to the point that you've stabilized this income, even though it's not, quote, unquote, a paycheck. Who gives a rip? I don't have a paycheck either, but my income's pretty stable. So I'm taking you down to $1,000. I'm paying off the car today, and I'm chunking the rest of it on that other loan, that $48,000 loan, and then let's get her paid off as fast as you can. You're making good money. Let's just get in attack mode. And you're going to be done with it in no time because of the way you do. You've been very wise it's just your nature. And what's very interesting is that while musicians are always on the creative side of the brain, there's a lot of math involved in music. And so it's not unusual to find a musician like you. It's not the stereotype, but it's not unusual to find the musician like you who is actually very careful and very mathematical and very process-driven, because music is a process. There's art to it, obviously, and things that I don't have, like rhythm and that kind of stuff. But there's, but it's a process. And so this is what we're doing. It's a financial process, like playing an instrument is. And it's a mathematical process. So just apply that to it, and you're going to be out of debt in no time. Because it's the way you're already living, John. You're already doing so much right just in your nature. And all you've got to do is just say, this is the steps, and I'm going to do the steps, and boom, you're going to get there really fast. Hold on, I'm going to send you a copy of the book, The Total Money Makeover. Up next is going to be Jessica in Louisville, Kentucky. Hi, Jessica. Welcome to the Ramsey Show.
Hi. Oh, my gosh. Thank you so much for taking my call. I am the biggest fan, and I listen to you every single day. And my 3 teenage boys listen to you in the car, and so they're really learning some great stuff, too. But just to keep it brief, my question is, my husband and I are on baby step 6. We are down to the last $25,000 that we owe on the mortgage. And we have been hitting it hard like the last 4 months. Gazelle intense, cut out all spending, only buying groceries, gas, just the necessities. And so my question is, originally we were going to pay it off June of 2023. We've moved it up to March of 2023. And now that the end is getting to the point where it's in sight, my son the other night asked if we could take him to Nashville at the end of December for the Titans-Cowboys game. And I said, the only way I'm going to Nashville is if I can go see Dave and do our debt-free scream on the stage. So I want to know, would it be okay for us to take the remaining money out of our emergency fund to pay off the mortgage, or should we just be patient and pay it off March 1st like we were planning?
Well, it's not an emergency.
No.
Okay. We generally use an emergency fund for emergencies, right?
Absolutely.
Okay. How much is in your emergency fund?
So right now we have $37,000 in the emergency fund, and then like just $6,000 in like a sinking fund for cars. So that $37,000. If we did pay off the mortgage, our monthly expenses would be right at $3,000. So if we took that down to like $17,000 or $20,000, we would still have that 6 months in that emergency fund to cover unexpected.
Well, if you've got 6 months in your emergency fund, when the smoke clears on this question, then you've got an emergency fund that's overfunded.
Right. And with our mortgage, it's close to being right. It's still a little bit over, but like if we take the
What's your
mortgage
household
out of the
income?
equation, we're north of $200,000, probably $250,000 with my side hustle.
I would use the car money in a heartbeat.
Okay.
We'll just delay buying a car. We'll get the house paid off because you're really focused on the house payoff. I'm willing to do that. And I'm willing to bring the emergency fund down as long as it's not dangerous. I just don't want to invite Murphy. Because when you don't have an emergency fund, you're sending an engraved invitation to crap to come visit you.
Oh, and he's shown up ever since we got really aggressive. Like we had a $2,700 car repair. We had an unexpected water. So yeah.
Yeah.
So
if you have three of those and then you end up making $200,000 a year with a paid for house and you're broke and can't eat, I don't like that plan.
Okay.
So you gotta stay above that, right? But if you're sitting there with $20K and you can still make it and you use the car money, does that sound okay to you?
Yeah. Absolutely. My first thought is, what if your roof leaks? What if, the car breaks down on the way to Nashville? There's so many things that could happen. So
yeah, you just don't want to go down too close. You don't want to violate where you're below the 3 to 6 months of expenses guideline because you're just asking for crap, And if you can do it and not get below that, then yeah. And I'm definitely using the car money. That's a no-brainer. But I think you're going to make it. I got a feeling. Yeah. I got a feeling you're focused.
Well, and you've got such a great income. It's like I think if you all pretty aggressive between now and then, you got a good shot.
Yeah. And by the way, we don't recommend, it's not our program to be that intense when you're at baby step 6, but it's okay if you want to be. Brought to you by the EveryDollar app. Start budgeting for free today.
We got Josh in Los Angeles, California. Josh, how can we help?
Hey, how's it going? Thanks for taking my call.
You bet. What's happening?
It's raining, so that's weird. But that's not why I'm calling.
All right.
I'm calling because I have 2 cars. I have an electric Fiat and I have a Jaguar, and I want to sell them both and get a Rivian. And so my question is, do I use the money that I sold both of them for to buy the Rivian in cash, or do I put that money in my Robinhood account, which is earning 5.25% interest, and then I have some more money in there, and then use the interest being paid to lease it so I can hold on to my principal?
All right. Is this a legit call, or is this one of those, hey, I've been listening to this show and I think I'm going to stump George and Ken? I got to know.
No, it's a real car.
It's a real call.
How old are you?
Oh, real call, yeah.
Right.
43.
And what do you make a year?
Making $380.
Wow. What do you do for a living?
I'm a TV producer.
Oh, very nice. Any shows that George watches?
Yeah.
I kid. We don't.
I've done Fear Factor. Back in the day, I did Deadliest Catch.
Oh, yeah.
Nice.
I used to watch Deadliest Catch. You wouldn't think about it looking at me, but I thought it was a fun show. I really did. And Fear Factor?
That was a fun one.
The pig intestines.
I used to test all the stuff.
Did you eat the pig intestines?
Yeah. Pig intestines actually weren't the worst thing that I've eaten, but yes.
Wow.
I did the pig intestines. The worst was probably I had to eat a rat for our 100th episode in New York.
Josh, your commitment to excellence is second to none. I applaud you, sir.
Respect.
All right, so
let's get to the numbers.
I know, but that people want to hear this, George.
Ken got distracted by the pig intestines.
Everything to you is a calculator. I just need to get to know these people. All right, would you just relax? America wants to know this. This is a man who ate a rat once. All right. Now, Josh.
Is my question absurd? Is that why you think I'm a fake caller?
Yes, I'll tell you why it's absurd.
Oh.
Here's why it's absurd.
Okay, please tell me.
You make a lot of money. And I'm guessing you have some equity in these other 2 cars?
They're paid for.
They're paid for. So why in the world would you lease a car with earned interest from your Robinhood account when you've got the money to just buy the car you want? This Rivian's expensive. It's about a $90,000 to $100,000 car, isn't it?
I was going to get a used one for $65 because I don't want to spend money on a new car.
You're brilliant, Josh. I just don't know what the angle is as to why you think this is a good money play. You seem like a very intelligent guy, the rat withstanding. Why would you want to lease the car? What's the benefit?
Well, my thought is that I have this money, so I have like $180,000 in my Robinhood's earning like $1,000 a month. And then I can just use that $1,000 a month to pay for the car. And then in 3 years, I still have my $200,000 sitting there as opposed to spending $65 of that to buy the Rivian. And then in 3 years, who knows what that thing's going to be worth?
Yeah, all right, George, you've heard this before.
Well, the problem with leasing is that you won't own anything at the end of that. And so you're just going to trade, you're going to sell these cars and just get on a life of payments. And this amount of money, it's a small part of your world. Even if you paid cash for this thing, you still have 6 figures sitting in savings that can work for you.
Right.
Instead of bleeding out to a lender every month to make them rich. Because all you're doing with leasing is you're prepaying the depreciation on that car.
That's the key
What
point.
about getting a loan for the car and paying for it that way?
That's just slightly less dumb, but still dumb to the nth degree. Why? It sounds like you're just wanting to leverage debt for your whole life, and you're too successful to play that game. That's a game for broke people. Your greatest wealth building tool right now is your income, making $380,000, and if you cannot give any of that money to lenders, you're going to be so unbelievably wealthy, and you're going to make very different choices when it comes to the things that you spend money on. Because when you get a loan, you go, well, I'll get the new one then. Who cares? The payment's low compared to my income. And that's how people end up giving away a large portion of their wealth over a long period of time. So instead, take what you would have put in a lease and add that to your investment accounts and to your savings.
Yeah, but you're also assuming here that there's no risk with the Robinhood account. There's like nothing could go wrong.
Well,
and let's just play
truthfully,
this out.
Savings rates are at all-time highs. You know that, Josh. And they're probably going to go down over the next few years as things cool off. And so there's an assumption that I'm always going to be making enough or making enough to make the spread worth it. And it's just too much brain calories burned, too much stress. I think the peace of mind of just owning it free and clear is going to make your life better.
Okay. Yeah, you're right. That's a good point. I didn't think about that interest rate going down at but 100%.
Well, and just the emotion of it, just the peace of mind. I've found that you could outmath me all day, Josh. You're a very smart dude, and on paper, you could win.
That's exactly right.
So I'm not that smart.
Yeah, well, it was for your job. So again, very impressive. You're very brave.
You know what? $380,000. I might eat a rat.
I don't think I would.
If it was it cooked?
That makes a difference to you?
Back then, no, for
it
the
does.
record, I was only making $500 a week. So
I think the psychological part of eating a rat doesn't matter whether it's raw or cooked.
I just feel like Dr. John Deloney would eat a rat.
He would, but he's nuts. That's a
fair.
whole separate deal.
That's a good point.
But Josh, here's the thing. I want to wrap this up because George is right. On paper, because there are people watching and listening to this, a lot of people. They're like, oh, Josh got it. Listen, on paper, you can make this case, but most people can only make the case on paper and they can't live it out. And so they start leasing, then they go, oh, I'm going to make debt work for me. And all these influencers on social media tell you, oh, you guys, you can make debt work. And most people can't. And if you think that it's our opinion, just look at the sheer numbers. And so that's why we're kind of preaching this. It's a philosophy that in the long run wins in the numbers big time. So I really appreciate your great sport. And George, this is a call that we get. I mean, this I feel like this call happens once a month.
Yeah. Well,
somebody goes, well, I can leverage debt and I can get this and I can do this. And
I did my attempt at, talking about these fleeces, and I made a video called Why Car Leasing is Stupid on my YouTube channel about 8 months ago. So Josh, go search for Why Car Leasing is Stupid on YouTube. You'll find my video there. Just give it a watch. It's less than 10 minutes. It's entertaining, and I go through the actual mathematics of why leasing a car is so dumb. I also did my biggest video ever, Ken. It's almost at 1 million views now. Is the #1 wealth killer. And it was all about car loans. And people were actually getting it after the video going, oh my gosh.
So the comments
I
are...
regret the car payment. I regret the lease. Never again.
Yeah. And well done. Well done, sir. 2 shameless plugs for your YouTube channel.
I'm trying to give people a next step because we can't cover this all in a radio call.
Oh, yeah. I got no problem with it. I'm just saying it was beautiful.
Thank you.
You're a giver. I mean, you just dropped that in there.
I just remembered. I was like, I think I covered this on a video recently and went in depth on the car lease.
But I thought you made a really good point here is that you can win an argument on paper that doesn't necessarily play out in real life.
And it rarely does. And I want to give Josh a gift because I had fun talking with him. I'm going to send you a copy of my book, Breaking Free from Broke. I want you to read, I believe it's chapter 5 on car loans because I break all of this down. I cover all of the objections, and I tell people what to do instead. And, dude, you were so successful. You just truly don't need debt in your life ever.
Yeah, good for you. You got the 2 cars. By the way, Josh, if Fear Factor makes a comeback, George and I would both like to audition.
Create your free every dollar budget today, the simplest way to budget for your life.
Hi, Catherine. Welcome to the show.
Hi. Thanks for having me. I think I need some tough love as I sit in my Tesla.
Plugged mine in about an hour ago, Catherine.
Well,
I appreciate
there
that.
goes the tough love because Rachel loves her a Tesla.
Yeah, mine's paid for, I'll say.
Very nice.
Perfect. So we don't have to sell it. We're doing good.
Check.
So I think I have so many complicated questions until I play over what I think you guys are going to say to me, and I know the answer. So I was debt-free, a millionaire with a property that was, had a lot of equity and, some money in the bank and a good income. And I was a single mom. I was widowed at 39.
Oh, wow.
And I had a nice nest egg, no debt. I met a fantastic man. We got married a few years ago. And with this awesome guy that, adopted my daughter came a massive amount of debt. To the tune of close to $500,000. And it was school loans and some credit card and some high interest short-term debt. And I want to know, the nest egg that I had built up was mine, but it's ours. The home equity, we sold that house, bought a house that we could all live in. We still have a lot of equity in that house. But am I paying off his school loans so that we can be debt-free? We have 2 paid-for cars. We have a lovely income. I just really have a hard time paying off his past life.
Yeah. And I hear that. And I, I feel like it's easier for us to kind of harp on the ones that just got married and they're like, oh, it's his debt, my debt. I'm like, you've just entered into a marriage, but when you've lived 2 separate lives in a sense, right? Because you got married later, had kids, and it's like you're merging these 2 lives. I think it's a harder pill to swallow. So I hear that, Catherine. So don't say that I'm not saying that this is just easy because I do have my answer and it is kind of black and white, but I want you to hear that it is hard. Like I get that. I absolutely get that. But here's the benefit. Let me say that. When couples can come together in a sense that you say, okay, this money that was mine, now I've entered into a marriage, and that means I am becoming one with someone else. And in every area of my life. And there's a sacrifice to that, right? You could put in money, you could put in time with that, you can put in maybe the way you want to raise kids, how you want to spend holidays. I mean, you could insert anything into that. And we just find that couples that have a sacrificial spirit, in a sense, to say, hey, I'm laying everything down, and together we're going to build a life as one, they thrive. And not just financially, because financially I believe they do, because you can run a race so much faster when both of you are on that same page. But I think it's even deeper than that, Catherine. There's a spiritual element there that when you say everything that I have is yours, even this nest egg, and as hard as it is to be like, oh, when you become one with that person, it does something in your marriage. There's an intimacy and a richness there. Now, I'll let Ken jump in a second, but my other asterisk, though, Catherine, is I really want to make sure that he's done with this, right? If his spirit is and his attitude is, God, I was so stupid. I took out all those loans. I wish I didn't. Never doing it again. We're living debt free. And it's this attitude shift as well, that you guys have the same value system. Then I feel like it would be easier to say, yeah, we're in this together. Now, if he doesn't, and he's still kind of messing around with debt, and it's a value system of yours to live debt free, then we have a marriage issue there. of a values issue. Does that make sense, Catherine?
Absolutely.
Yeah.
And I so connect with what you said. I think where I've played this is, I put our house on a 15-year mortgage. We paid off both of our cars. And I have him putting all of his income into his school loan payments every month.
Good.
And I hit the house really hard, and I make sure everything else is debt-free. I don't know that if I just paid those off, if that money that he has every month that's going off those loans would just disappear. So I don't know that.
Okay, so
I feel like we're on the same page when we talk retirement,
Right.
but I don't know if short-term he would have the intensity to get that loan debt off, and that money might just disappear somewhere else.
Okay, that's what I was wondering, because I could feel that you were like, I know what you're going to say, and I know that there's something that's really eating at you. Are you guys, I have two questions. Are you guys shared bank accounts? Are you guys doing all your money together, or are you guys separate bank accounts?
Separate bank accounts?
Yeah, I could tell.
I pay all the bills.
I know.
So it's.
But here's my point. Here's why I asked the question. That's what's eating at you, because you've got some natural psychological tension, and that's why Dave, and as an extension, we for decades have said we want you, and Rachel just gave you the whole unity thing. And so you agreed with everything Rachel said. So if you agree with everything Rachel said, and I know you did, so you guys need to combine bank accounts, because that's where the tension is coming from. You're like, this is my money.
Oh, yeah.
I've worked hard. And then you're like, I'm having him put all of his income into the student loan. And so therein lies the tension by which you called today.
Yep.
So I listen, first of all, let me say, I completely understand why you feel the way you feel. I share Rachel's opinion on it. I get it. But you guys have decided to be married, and it's a long-term play, yes or no?
Yes, absolutely.
Yes. So today, we combine bank accounts. I still like the strategy of taking all of his income. I love the intensity, but I would not do him on the student loans and you on the house. It's no, we're going to put this in the baby steps. So we're going to put the student loans in baby step 2, and you've done this before. And so both of you attack the student loans, and then both of you pay off the house.
Yeah, and Catherine, hold on, because Austin's going to pick up, and we're going to give you a year subscription to Ramsey Plus, and it has Every Dollar in there, which is our budgeting app. And I was just texting with my husband this morning about ours, because I was like, what's this Venmo? Where should it go? And so I want you guys to budget together for 3 months, okay? And I want to say by February, there might be a more emotional ease for you to pay everything, pay it all off together as a team. Once you guys have been, even from a tactical sense, budgeting together, it's coming out of one account. Like, there is a unity there versus a separation, like Ken was saying. So, Catherine, I hope that helps, but stay on the line. Austin will pick up.